ICAI sum number 1, December 2021. Question was of 10 marks. You need to draw a balance sheet. Following are the data in the respect of ABC Industries for the year ended 31st March 2021. Debt to total asset ratio is 0.40. Long-term debt to equity ratio is 30%. Try to understand. Here the word uses debt, here the word uses long-term debt. So whenever a debt word is used, we will be taking long-term as well as short-term. Normally debt basically means long-term, but in this question, as the only word uses debt over in first sentence and long-term debt in second sentence, in first debt to total asset ratio, we will be taking debt as a total debt. GP margin is given, account receivable period is given, quick ratio is given, inventory holding period is given, COGS is given. Liabilities and assets required. Complete the balance sheet of ABC Industries as on 31st March 2021. All calculation should be in nearest rupee. Assume 360 days in a year. So I'll be drawing a balance sheet. Equity share capital, reserves and surplus, long-term debt, and accounts payable, that is creditors. The total is 50 lakhs. There is liability side, rupees, balance sheet, asset side, rupees. Even equity share capital is given, which is 20 lakhs. On asset side, fixed asset and current assets. In current asset, there are inventory, debtors and cash. Understand, if the total of liability side is 50 lakhs, total of asset side will be 50 lakhs. So here we get answer of total assets. Total assets will be nothing but 50 lakhs. As and when I will be getting the answer, I will be completing it. Debt to total asset ratio. Now we are having total assets, so we can use this. Debt to total asset ratio is 0.40. Debt to total asset ratio is 0.40. As I told you, I will be considering debt as a long-term debt also and short-term debt also, which is nothing but creditors. So long-term debt plus creditors divided by total assets, we are knowing is 50 lakhs is equal to 0.40. So long-term debt plus creditors is 20 lakhs. So this is my first calculation. Long-term debt plus creditors are 20 lakhs. So total of this two is 20 lakhs. Long-term debt to equity ratio. Long-term debt to equity ratio is 30%. Long-term debt to equity ratio is 0.30. Now please understand, here equity does not mean only equity share capital. Equity is equity share capital plus reserves and surplus. It is equity, not equity shareholders fund or equity share capital. Equity is equity share capital plus reserves and surplus, but we are not having idea of equity share capital and reserves and surplus. But we can get idea of equity share capital and reserves and surplus from the information which is available. Total of the balance sheet is 50 lakhs. Equity share capital is 20 lakhs. Long-term debt plus creditor is 20 lakhs. If the total needs to be 50 lakhs, reserves and surplus will be nothing but 10 lakhs. How? This 50 lakhs minus 20 lakhs minus 20 lakhs will be nothing but 10 lakhs. So we now even know equity share capital and reserves and surplus. Equity share capital plus reserves and surplus are 30 lakhs, which is equity. So long-term debt upon 30 lakhs is equal to 0.30. So long-term debt is 9 lakhs. Here we have got our second answer, which is long-term debt, which is nothing but 9 lakhs. Now, if this is 9 lakhs and total of long-term debt and creditor is 20 lakhs, creditors automatically will be 11 lakhs. We have used this. Gross profit margin on sales is 20%. COGS is the 64 lakhs. So we can easily get sales from it. If GP is 20% and COGS is 64 lakhs. Calculation number 3. Sales minus COGS is equal to, sales minus GP is equal to COGS. If sales is 100, GP ratio is 20%, so 20, COGS will be 80. We are knowing the answer of COGS, 64 lakhs. We are interested in sales. Cross multiplication will be my answer. 64 lakhs into 100 divided by 80, which is 80 lakhs. We did not fit this in our balance sheet. Sales will not come in balance sheet. So we have used the GP ratio. We have used the COGS. Account receivable period 36 days. Quick ratio 0.9. Inventory holding period is 55 days. Alright, let us first go to accounts receivable period. We'll be getting data from this. 36 days. We are assuming sales as a fully credit. So debtors will be is equal to sales into 36 divided by 360. 36 total we need to take 360. This is the same as if 360 days sales is say 80 lakhs. What will be sales of 36 days, which will always remain in our debtors. So sales is 80 lakhs into 36 divided by 360, which will be 8 lakhs rupees. So I got answer of debtors 8 lakh rupees. I can even get answer of inventory. I've used this. Inventory holding period. Inventory holding period is 55 days. I will assume this is average inventory holding period. If it is 55 days, I can use this inventory turnover ratio concept. Inventory turnover ratio. If it is 55 days, it is 360 upon 55 times. This will be nothing but my inventory turnover ratio in times. What is inventory turnover ratio? In denominator, inventory will be there. In numerator, COGS will be there. If COGS is not available, you can even use the sales. Inventory turnover ratio is 360 upon 55. COGS we are knowing. I will be getting answer of inventory. Inventory will be 64 lakhs into 55 divided by 360, which is 9,77,777. I am assuming opening inventory is equal to closing inventory is equal to average inventory. If we cannot find out specifically opening and closing, we will be always using this. So inventory will be 9,77,777. You got answer of inventory, which is 9,77,777 or 78. Now, information of cash is not available, information of fixed asset is not available, but a ratio is given which is quick ratio. That is the only ratio pending. Quick ratio is 0.9. Quick ratio is 0.9. What is quick ratio? It is total current assets minus stock. So what is total current asset is the stock plus debtors plus cash, minus stock is nothing but debtors plus cash. So in numerator, debtors plus cash. What I have done? Current assets minus stock. So current asset is the stock plus debtors plus cash, minus stock is equal to debtors plus cash. Upon current liability, here there is only creditors 0.9. Debtors figure we are knowing 8 lakh rupees plus cash. So cash will be easily able to find out. Current liability is 11 lakh rupees is equal to 0.9. Which is 1,90,000. So cash is 1,90,000. So in two figures we have got this one figure 1,90,000. So total of current asset will be $19,67,777. We will be getting answer of even fixed asset. $30,32,223. Let me verify. 50 lakhs minus 19 lakhs 67,223. And here I have completed my full balance sheet which was required in the question.